Hey everybody, Neal Spann here with Seven Bridges Group, Berkshire Hathaway, sitting with our good friend Bruce Dodd from People's Home Equity. We've been working with Bruce for many years now.
For a while.
For a while.
For a while.
He's one of our partners, but we felt like we would do a video today to help some of the newer home buyers out there, maybe a first-time home buyer, maybe somebody that just hasn't had a lot of mortgages in their lifetime, or it's been a long time since they did one. So one of the questions that I know a lot of people have is just, how do you get started? How do you get a mortgage?
You know, getting a mortgage, for most people, it's really no big deal. Lender's just going to need to gather some basic information about you. You'll know the answers. Things like name, address, that sort of thing. So get a basic application, and then we'll need to take a look at credit. And then there's some supporting documents typically they will need. In most situations, the answer to everything in the mortgage business is two. For most people, you're going to need to document your income, the last couple of years W-2s.
Okay.
Most people get paid a couple times a month, every other week, something like that. So a lender's going to need 2 paychecks, and in most cases, is going to need the last 2 bank statements. Pretty easy documents, not that difficult. They don't need your 3rd grade transcript. They don't need anything like that. So it's not going to be that difficult.
And most of the stuff you guys are doing nowadays is online, easily. You can complete an application, have everything done in just a matter of
so
minutes.
for most people say, well, I don't get a pay stub. Well, all you got to do is go to your employee portal, download it, and upload it is typically what's going to have to take place. The most important thing is really for folks to have a good idea of what their personal boundaries are. Where do you feel comfortable with a house payment? How much do you want to pay a month? How much cash are you comfortable putting in the transaction?
And I think that's another question that a lot of our buyers have when we first meet them is, or we first talk to them on the phone, is they're worried about their credit score. Mm-hmm. I mean, what are some of the credit score parameters? I mean, you don't have to have a perfect credit score, right?
No. If you look, for example, we're here today in beautiful Chattanooga, Tennessee. In Chattanooga or in Tennessee, the median credit score in the state of Tennessee is 708. You can get a mortgage down, technically down into the 500 credit score range.
Okay.
For most programs, the client's going to want to be sort of in the 6 to 640 range. It's sort of an entry point. But for what I would tell most people is get with the lender and just let them take a look. Often there are some things you can do with credit that are not a big deal. If you look at credit scores were designed by the credit card industry years ago to make it much easier to determine what type of credit card they were going to give you. And so they're heavily weighted towards credit card usage. But you need to get somebody to take a look, but your credit doesn't have to be perfect.
Doesn't have to be perfect. So I know another question that a lot of buyers have, whether maybe first-time home buyers or maybe even people that are moving up, in this market is so competitive. They're thinking, well, conventional loan, I've got to have 20% down. Talk to us a little bit about that.
Yeah, so that's a misconception out there is I have to have 20% to put down for a mortgage. Down payments can be, if you're a veteran, could be 0. But for most programs, sort of between 3 and 5%, sort of a minimum number. But there's a lot of sources for down payments. You can get a gift from a family member. In some cases, people will use a retirement account. So there's a lot of ways you can come up with that down payment money. Once again, it's just great to just start the conversation and find out what your specific situation is. But you absolutely don't have to have 20% to buy a house. And quite frankly, as low as rates are today, it may not make sense to put down the 20% even if you do have it.
Yeah, no, we've been talking about that with a lot of our buyers we've worked out recently, is that you may be better off putting down 10%. So I know we've had a lot of people that we've been working with recently putting down 10% because their private mortgage insurance will go away, but interest rates are low enough that amount actually makes more sense.
Let's talk about mortgage insurance.
Yeah.
And so what happens is typically if you don't put down 20%, you have mortgage insurance out there. Mortgage insurance insures the lender in the case of a default. Well, mortgage insurance is like any other kind of insurance. Insurance companies have to justify their premiums based on what their losses are. Over the last couple of years, not a lot of foreclosures. For most people, they get in a jam, they can sell their house. Losses haven't been very much. So mortgage insurance rates have come way down. Also, mortgage insurance is going to be dependent on, what your credit score is, that sort of thing. It used to be one size fits all. It's not that way anymore. So what we find often is people will think, hey, I've got to put down 20% because I don't want to pay mortgage insurance. Well, when you look at the cost of taking money out of investments, you look at low interest rates, in some cases, it makes sense to pay the mortgage insurance. And in a lot of cases, it's not that much. So once again, it's one of those situations, you just need to take a look at the numbers and make a decision based on what the facts are, not just about what you've heard in the past.
Yeah. So I think as we develop relationships with our clients as realtors, you develop relationships with your clients as their lender, as their mortgage broker. And so I think it's important to know that there's a lot of different programs out there, and it's not one size fits all anymore. And if you're going to one of the big box online places, you're not going to get this one-on-one kind of ability to adjust it and customize it to what really fits your needs.
Absolutely. So no, it's important. What worked for a buddy of yours or for your cousin may not be the exact same thing for you.
Yeah.
There may be a better way of doing it for you. There may be something that makes more sense for your particular situation. And so it's not one size fits all. And so it's important to just communicate, what are my goals? What are my concerns? Are there things I have coming up over the next couple of years that are going to be something I need to think about from a financial standpoint?
Mm-hmm.
And so we can come up with what the right decisions are for you.
Yeah. And I think it's another important thing to point out that we've got a lot of buyers, I think, in our market out there that for whatever reason just think they wouldn't qualify, when a conversation with you might actually prove that they would actually be a very qualified buyer.
Absolutely, and there's things out there that the agencies, Fannie Mae and Freddie Mac, have done over the last couple months and will be implementing that's going to make it a little easier for folks. For example, they're going to allow us to count your rent as a trade line on your credit report. So some people, they don't have a whole lot, but they've been paying rent. There's some other things coming down the pike. So it's really a lot easier of a process, and it's a lot more approachable than a lot of people think it is.
Yeah, so I think one last thing that I would bring up, this is probably the number one question I get from people, is if I talk to a lender, how much is it going to ding my credit score?
Okay.
And that's something that people are concerned about, but we know from, working with each other in the past that it's really not a big concern.
Yeah, so when you apply for a mortgage, typical mortgage inquiry is going to be about a 3-point hit to your credit score. So it's not a big deal. Now, what you'll hear from people is, well, this lender pulled my credit and my credit went way down. It's not really accurate. Them pulling it is not what made it go down. There may have been some things that recently occurred. But the other thing is mortgage credit scores are going to be different than what you're seeing out there on a lot of the consumer sites you can see.
Yeah.
Those scores are all based on a credit card scoring methodology. Mortgages, it's just a little bit different. It's different credit score when you're getting a credit card, when you're buying a car, or when you're buying a house. They're different scores. There's different systems they use. So what's important is in some cases your mortgage score may be a little better.
Yeah.
And so it's just important to get with a lender and let us take a look.
Yeah. And traditionally, we're still record low interest rates, right?
Yeah, if you look at rates are, screaming low. If you look over the last decade, they've been actually pretty good. But if you look historically back over the last 30 or 40 years, rates are like ridiculously low right now.
Yeah.
So it's super low cost to borrow money. Makes a lot of sense. If you're renting right now, that's not doing anything for your wealth. Mm-hmm. And now is a great approachable time to where your buying power is going to be more than if rates go up.
So guys, here's the story. Right now is a great time to buy a home in Chattanooga or wherever you're at. The Seven Bridges Group, Berkshire Hathaway, we're here to help you. We'll get you in touch with Bruce Dodd, People's Home Equity, and everybody over there. They've been wonderful for us to work with over the years. They're going to answer all your questions. They're going to make you feel great about the process, and we're going to help find you the right home for you. So you guys, thanks for joining us today, and we hope to talk to you guys soon, and we'll see you. Have a good one.